Now, guys, I want to give you guys a little bit of a training here. Another tool to kind of add to your arsenal here when it comes to scalping these futures. So a lot of times, maybe if you guys are new in the Discord, you guys hear me talking about, the first hour candle. Let's allow the first hour candle to close. Let's kind of see where that's at. So I want to give you guys a little bit of a trick that you guys can use. So my first hour candle is going to start at 6 a.m. Pacific Standard Time. That hour candle is going to close at 7 a.m. What we can do, if that's a little bit confusing for you, is we can use the 30-minute time frame, and it's going to be the same exact thing. So essentially what we're looking for here is to allow the first 30 minutes of the market to kind of digest, right? So a lot of times, the first, 5, 10, 15, 20 minutes is very, very volatile. Stocks are moving up, they're moving down. Sometimes you get head fakes in there, especially if you're playing a 1 minute time frame or a 2 minute time frame or a 5 minute time frame. The risk is essentially, very, very big. So what we're looking to do here is allow that first 30 minutes to kind of digest and let it close, especially when the market is a little bit more choppier. We're not really sure if we're going to be, trading with inside of a range. We're not really sure if the bulls are going to take back control or the sellers going to take control. So what we want to see is that first hour candle get closed, and essentially it's the first 30 minutes of the market open. So for me here in California, it's 6:30 in the morning to 7 a.m. And this is how simple that this is going to be. What we are going to do is mark out the high wick of that first 30-minute close and mark out the low wick, okay? So you can see I already had it here on my screen. And actually, if you guys are watching the live stream today, I was talking about that 15126 level, and it was a beautiful level on the 1 hour time frame. But to kind of make things a little bit more clear, all we're going to set up on our charts is a 20 SMA, a 200 SMA, and then we're going to mark out that first 30-minute high and first 30-minute low. Now, what we're looking for after that is, are we trading above the 20 SMA? Okay, that's all we need to know. Or are we trading below the 20 SMA? That is going to set up your bias as to where you're going to look to play. So if we are over the 30-minute SMA of the 20 period moving average, we are going to look for that confirmation long. It's the same way of scalping the 5-minute 20 SMA play, but it's kind of just giving you more time to relax and more time for the trend to kind of develop without all of the head fakes off the open. So you can see here the first 30-minute candle at 6:30 a.m. closes. That price is 15126, and it's actually over the 20 SMA, which is very, very good. That's what we want to see. We would be looking to go long here. Now, for all of the options guys who may be watching this, we would be looking to take calls in this particular situation on the particular stock here that's correlating with the NASDAQ 100. So if, for example, the market did not close above the 20 SMA, or, maybe it wicked over and closes, slightly below it and then starts pulling back, what we would then be looking for to short the market is a break below 15,035, which is the opening range lows. So we can call it the first hour candle, we can call it 30 minutes off the open, we can call it the opening range, we can call it whatever essentially we want to call it. What I want to get familiar with and have everyone get familiar with is understanding where that first hour candle closes, okay? So the first hour candle is also represented by the first 30-minute candle. So if we're looking at the 30-minute time frame, it's going to be the 30-minute time frame. If we're looking at the 1 hour candles, that 1 hour candle is going to start at 6 a.m. and it's going to close at 7 a.m., which essentially is the same range, okay? So what we would be looking for here is that top of the hour, that 7 a.m., to confirm the price action. Now, again, we may be thinking, where are we going to put our stops, right? We don't want to give it, from 15126 down to 15035 worth of room. All we're looking to do is we're going to watch this 30-minute time frame here. We're going to let this get confirmed. And as soon as it gets confirmed, meaning that we break the 15126, which is the high wick here, we're going to enter in long, and we're just simply going to flip to the 5-minute time frame. So as soon as we break that price action on the hour chart or B, the 30-minute chart. We are then going to enter in long and then go to the 5-minute chart. Now, if we look at the 7 a.m. candle here, immediately we break that 15,126 area. And I'm going to make this a little bit bigger so we can just actually zoom in on this price action. So what I'm going to look at here, 650, 655, 7 a.m. This is the candle that we're going to want to enter into. This candle here, okay? So again, if I was to draw a little bit of a line here, we want to enter into this candle. We do not need this candle to break to close. All we need is it to break that opening range of that 30-minute candle. Okay, so again, just to kind of repeat this process, very, very simple here. What we're going to be looking at is, take this off once more. We're going to be letting the first 30 minutes of the market play out. We're going to simply mark the highs, mark the lows. And from there, we're going to ask ourselves the question, are we trading over or under the 20 SMA? If we're over the 20 SMA, we're looking to go long. If we're trading below the 20 SMA, we're looking for the low wick to get confirmed. And then we are going to take that short position. So as soon as we're watching this 30-minute candle, we watch this price action break that 15,126. We go ahead and buy long, and then we flip to the 5-minute time frame so we can tighten up the risk. So again, let me go ahead and draw a line here. You can see we're going to be entering in onto this candle, and we can do one of two things. We can use that 1-bar stop, which would be the 7 a.m. candle's low wick, or we can use a close below the 200 period moving average. Or if you're comfortable giving it more risk, you can use the 20 period moving average. Now, there's going to be different stops based on your level of trading and your level of risk management. Some people want a tighter stop, so maybe we use the 200. Some people want a bigger stop, maybe we use a 1-bar. Some people want to give it more time to kind of work out and they want to turn this into a long day trade. We would just simply trail it with the 20 SMA. And I've actually got another little indicator that I'm going to be bringing into the mix once you guys start implementing this strategy and you guys start taking, a series of trades, 10, 15, 20 trades. From there, we'll kind of analyze, how many trades did we win? How many trades failed? And then from there, if the stop loss is too big, I've got something for us that we can add into this process. But again, I don't want to overwhelm everyone with a bunch of different indicators and a bunch of different, commotion going on. So what essentially we would be looking for here all depends on your level of comfortability, right? So for me, I'm going to be looking for after entry 1, 2, 3 pushes higher. Okay. Now you're going to notice that you're going to get 5, 10, 15 minutes of pullback here. These candles is red. You might as well call this candle red and red as well. And then we get the push higher. Again, you're going to give back a lot of profits here. Again, if you're comfortable selling from 15,131 into that 15,161, which is 30 points, be my guest. I would always recommend, if you're trading the NQ, start to take profits, maybe 15 points, maybe 20 points, maybe 25 handles. At least take something off the table. If you're playing multiple contracts, even if you're playing 2, take something off at 15, 20, 25, and then kind of move your stop loss either to, let's say a break even, or kind of trail it up a little bit, with that 20 SMA or with the 200 SMA. It doesn't really matter, but just kind of move your stop loss up a little bit mentally, so you guys don't give away all the profits in case something goes ahead and decides to fail. Now, again, I would be looking to take profits here. Okay. Probably get out of a full position here. That's just me. That's just the way that I trade, because I like to identify moves to come. But again, you can see here from this opening range break here, from the opening hour candles break, from that first 30-minute candles breakout over the 15,126, it goes from a price of 15,126 all the way up to highs of around 15,247. So essentially, we're looking at about a 120 point move in a matter of about 15 minutes, guys. You know, this strategy is very, very powerful. It can make you a lot of money, and realistically, there's hundreds of more strategies that I can give you guys. There's hundreds of more chart patterns. There's hundreds of more supply and demand kind of setups that we can take. But what I want to really focus on here is, let's stick to one for at least 15 trades, for at least 20 trades. If it's the 5-minute 20 play, then when you get your 5-minute 20 play, take that, use a 1-bar stop. If you're not comfortable trading in the first 30 minutes of the market, let's use the first hour candle, aka that first 30-minute candle. Let's use a 30-minute time frame. Let's mark out the highs and lows. Let's evaluate where we're at in the process as far as the 20 SMA and the 200 SMA, and let's kind of take our trades from there. But let's give probabilities enough room and enough time to actually work in our favor. A lot of times we take a trade, we might lose that trade. We're hesitant to take the next one because we don't want to lose another trade. So then we miss out on a good move, but we've seen it. Let's not be hesitant. Let's take the trades. Let's act as adults, and let's also understand that this game is built on probabilities, guys. The more chances we give ourselves to make money, the more chances we're going to make money. Now, I'm never going to recommend get into a trade and not have a stop loss, not understand where you want to get out of the trade, as long as we protect our risk to the downside, and as long as we have a technical reason for taking the trade, all trades are valid. If someone was to ask you, why did you take this trade? As long as you can explain it to somebody, it doesn't matter who it is, explain it to me, explain it to your neighbor, explain it to your mom, explain it to your friend, explain it to your wife, doesn't really matter. As long as you can explain technically why you took the trade and where were you going to protect your risk at, the trade is valid. Okay. A lot of times people think there has to be some perfect entry. A lot of times people think there has to be some secret to the market as far as where the liquidity is sitting at, where's the best place that you're always going to win these trades. It doesn't work that way. I know guys who use the VWAP. I know guys who use pivots. I know people who play supply and demand. I know people who don't have anything on their charts whatsoever and play price action. I know people who trade the 20 SMA. I know people who trade all sorts of different ways. They all work, as long as you can justify the risk that you're putting on the table and you can continue to have enough cash to take the trades that's set up based on your edge. So the main thing that I want to focus on here is make sure you have an edge, which we do here at Evolution Traders. We've got a hell of an edge. And, you know, we can continue to make money as a room here. We can be a very, very strong trading team that can pull in a lot of profits if we start working together. If you see a particular setup on the 5-minute time frame, on the 30-minute opening range breakout system that I showed you guys here, call it out. Let the next guy know. If someone's in a trade and technically you know they should not be in the trade, let them know as well. I'll always do my best to let everyone know if, hey, maybe this is not such a good idea of a trade. Maybe it looks like we're chasing. Like, for example, if we didn't take any trades off the open here and we're kind of just watching, and we're kind of asking up here, hey, should I get long? The market's going. I'm going to sit there and I'm going to tell someone, why didn't you get in back here? Why didn't you get in right here? Why didn't you get in on this particular break here, right? Here's another one that I'm going to get to start showing you guys. But, you know, why wouldn't we take this breakout? Why are we looking to chase way up here an hour after the open and 2 hours after the open when there was multiple opportunities for us to get into the trades? So again, use this strategy. You know, if you don't like to trade that first opening 5 minutes, if you don't like to trade the first opening 10 minutes, you know, and you want to see where that first hour candle closes, which is AKA the 30-minute candle time frame as well. Okay. So if I was to just pull up the 1 hour time frame so you guys can kind of see what I'm talking about here, look at where the first hour candle closed. Okay. See where this is an hour time frame. Look at where the hour candle closed. It's the same place as our 30-minute time frame chart. Look at the hour candles lows. It's the same thing as our 30-minute time frame. Okay, so it's going to be about the same thing, give or take. Sometimes it might be a little different, but more than likely that opening 6 a.m. candle, which is the hour candle, is going to be the same as your 30-minute candle. But if it's just easier for you to use the 30-minute candlesticks, right? So that way, you know, as soon as the market opens, that candle is going to start forming, which was here. Okay. So as soon as the market opens here, that's your first candle of the day that's going to get printed. Fine. So be it. Whatever's easier to you guys, whether it's the hour or whether it's the 30-minute candle, doesn't really matter. Again, 30-minute candle, mark out the highs, mark out the lows, correlate that to where are we sitting. Okay. Are we over under the 20? And then where is our 200? Because in this particular case here, if we get in, are we looking to, expect this just to continue higher, even though it did? But look at what it did once it tested the 200, pulled back, pulled back, pulled back, and then tested again, pulled back. You don't want to get caught in this kind of choppiness action here, because this action here is what gives people, false hope. This kind of action here is what blows accounts. This kind of action here is what makes trading very, very stressful. If we can catch it early off the opening range, let's take that into supply. Again, 200 SMA being your supply, 20 SMA being that we're trading over, being your demand. If we can take this play 10 times out of 10 times, we will make money over a series of 15, 20, 25 trades. I can almost guarantee you that. And again, I'm not supposed to be guaranteeing anything, but I've been around this game long enough and experienced enough to put my wholehearted word behind it that if you just follow the script and you have an exit plan as far as a stop loss, and you take the trade setups as they come, and you lock in your profits, and you hold your runners, and you move your stop losses up, and you just do the right thing, you will make money. Okay. Maybe it doesn't seem like that in the very beginning, but again, the more you do this, the more your eyes and mind become trained, you're going to get a lot better at it. I hope this video helps you guys. Again, if you have any questions intraday, don't hesitate to ask. Drop it in the gold members chat channel, and I'll get back to you guys.